Today we're with Sean Gregory, Managing Director and CEO of Barra Resources. Sean, thanks for your time.
My pleasure, David.
Are you able to share some of the background of Barra?
Barra Resources is an ASX listed company with a capitalisation of about $22 million. We've got a healthy cash balance of $2.4 million and we're set for a big 2018.
New to the company, what's your background and what attracted you to Barra?
Just joined Barra in the last couple of months. I've got a background of 19 years developing projects and supporting mining operations, initially with BHP and then with Murchison Metals and most recently with Mineral Resources, one of Australia's most active and fit for purpose mining services companies.
Operating the exciting battery market, you clearly have a view on Cobalt.
The Cobalt market certainly is an exciting space, but it's important to note it isn't a recent phenomenon, it isn't a boom or a bubble. I've got a chart that shows the 120-year price history for Cobalt and we're trading well within that range, and that's on those 34 established industrial uses for Cobalt, ceramics, hard alloys, those sorts of things. Of course the battery metal space is going to change that, the electric vehicle story is going to change all of that, and that is still ahead of us. The reason why I have that view comes down to demand and supply. Demand is inelastic. There's about $1 of Cobalt in your iPhone. Around about 2% of the cost of a Tesla electric vehicle is Cobalt. Consumers are going to be relatively insensitive if that price increases or doubles or triples. On the supply side of the ledger, 97% of all Cobalt is a byproduct of nickel and copper mining. Those companies need increasing nickel and copper prices to justify new investment. Mount Thirsty, however, is more heavily exposed to the Cobalt price and is ready to respond to meet that demand.
And some of the recent milestones that investors should have focused on?
In October 2017, we published our scoping study for our Mount Thirsty Cobalt Nickel project. The scoping study presented very strong economics for the project on appropriately conservative assumptions and a very low capital price. For $212 million of capital, we're achieving an NPV of $290 million, which is very healthy, and it's at that really sweet spot of affordable capital price. We're only recovering about 73% of the cobalt and 21% of the nickel to still give those positive economic results. But it very much provides a base case. We'll be moving into a pre-feasibility study during 2018. We're out there in the marketplace talking to engineers, top tier engineers, brand name engineers to help us with our pre-feasibility study.
The study work is obviously a key part of 2018. What are some of the other activities the company will be looking to complete over the next 3 to 6 months?
Barra has a dual commodity strategy, both in the cobalt nickel space and pushing that project development through the milestones, but also in the gold space. And we've got some really exciting gold prospects. Everything from brownfields deposits, such as our Burbanks deposits near Cobalt. There's been over 400,000 ounces pulled out of that deposit, and we've still got 95,000 ounces in the ground at Birthday Gift. We'll be out there drilling very, very shortly, looking to extend those targets, looking to extend the brownfields mineralisation along strike. There's these big gaps there. This mining centre's been there since 1885, but when we look at the long section, there's great big gaps that have never had drill holes in them. So we'll be testing those very, very shortly, and then we'll also be moving on towards some greenfields targets that we've got. Again, very, very close to the infrastructure, right there near Coolgardie, a lot of infrastructure, a lot of mills around. We've got business relationships into a lot of those mill owners as well.
Exciting times ahead for Barra. Sean, thanks for your time.
My pleasure, David.